We have from the FCA coming up now a trio of policy, supervision and authorisation. No questions at the end though. However, they will be upstairs on the balcony level, all three of them, happy to do sit-downs and take questions and go through stuff. So without further ado, I'll hand over to the FCA. The floor is yours.
Thank you very much. Hello, everybody. In one of the earlier sessions, Marion described regulation as being a friend of the industry. My fellow regulators and I are very grateful for the opportunity to provide an update on what we are doing, sometimes as critical friends, in supervision, at the Authorisations gateway, and through our policy work to help ensure that payments and e-money firms are able to consistently and sustainably meet customer needs and expectations. A slide is coming up on screen as if by magic, which summarizes the 4 outcomes that we are looking to achieve and the priority activities underpinning those. In the next 25 minutes, you'll hear our perspective on those. My name's Paul Roe. I head up the FCA department that supervises 1,800 payments and e-money firms. And I'll kick us off by briefly setting out our priorities through our supervisory work. So starting with the first priority, we think it's absolutely paramount, I'm sure you all agree, that your customers' money is safe. And this involves understanding the risk that customers' money might be lost if firms fail. And firms do fail, even well-run ones with decent leadership. And so you need to mitigate that risk through effective prudential risk management, through robust safeguarding, and through decent wind-down planning. And I know I'm not telling you anything new here, but if you saw things through our eyes, I think you'd be astonished at the number of times we see this core responsibility being neglected by people running firms in the payments sector. Our second objective there, that financial system integrity is not compromised, and I'm sure I'm preaching to the converted when I say that your firms should not be used to facilitate financial crime or fraud or terrorist financing or human trafficking or sanctions busting. But we do continue to see material failings in firms' financial crime controls. Often the controls are not keeping up with the growth of a firm or its expansion into new business areas, and I mentioned crypto as an example there. And we spend far more time than we would like to stopping these firms from causing harm through undertakings and business restrictions. And failings in financial crime are also driving a large number of skilled person reviews, firms' money, which we consider will be better spent getting the controls right in the first place. We've heard several references earlier this morning to strong customer authentication, and we're pleased to see that that has been received well, and hope to see that that is being used to help combat fraud. And I did mention sanctions. Of course, this is particularly important at the current time. We do expect firms to have robust sanctions controls and to report known or suspected breaches to FCA. And it's worth noting that in the past 8 months, a couple of firms have been subject to public penalties from FCA for sanctions abuses, sanctions failings. Our third objective is the one that really should be something of a no-brainer, that customers get the products and services they need, because market forces should help ensure that outcome. And of course, we recognize that payments and e-money firms exist and very often thrive because they've been able to identify and address an untapped customer need, or to transform choice or value or convenience or customer service. But we also see too many instances where customers are not able to follow the happy path, so to speak, in terms of their engagement with a firm. And when things get difficult, they really struggle to get in touch with a firm and to get the sort of full life service that they expect. And this is a large driver of communication to the FCA contact center. So we want to make sure that while we recognize there's an awful lot of focus at the front end of appealing to customers, that focus is also replicated through the entire life cycle, and particularly in terms of the back office controls and the sort of aftercare after the initial sort of onboarding of a customer. And I cite an example of account freezes, which are sometimes entirely necessary, of course, while firms undertake appropriate investigations, but they need to be capable of being conducted and completed swiftly so that customer inconvenience and potential customer inaccessibility to money, which they rely on, is kept to as short a period as is necessary. We think it's really important, I'm sure you agree, that a lot of thought is given to customers in vulnerable circumstances. We tend to use that phrase now rather than vulnerable customers, because vulnerability is not necessarily something that is innate, but it is something that could happen to anybody depending on their life circumstances. And understanding what the risks are to customers in vulnerable circumstances and how products and services and customer contact routes can best adapt and meet the needs of customers in vulnerable circumstances is particularly important, even though we recognise it may account for a very small proportion of customer journeys. I think many of you are aware that we have some concerns about customer understanding, or more specifically, customer misunderstanding, particularly the services that a lot of firms, particularly e-money firms, provide these days. They can be mistaken for banking services. And quite frankly, sometimes the marketing activities of those firms makes that almost inevitable. So it is important that customers make an informed choice, and that choice reflects an understanding of how their money is protected. So that's important to us. Our final one there is about competition and innovation in the interests of consumers. We recognise that competition and innovation can help drive progress across the suite of outcomes we've described above, as well as actually catalysing improvements in other sectors to which payments firms provide competition. Underpinning those four outcomes, we have a couple of cross-cutting priorities. On operational resilience, hopefully you're aware of the new expectations that kick in on the 1st of April for firms to have reasonable measures to minimise the risk of systemic failure, but also robust plans to cope with incidents in a customer-centric manner. And leadership and governance is absolutely critical and underpins all of this. We expect leaders to understand the risks associated with the businesses that they run. We expect them to have effective governance arrangements that allow for the transmission through the organisation of the tempo, the tone, the culture and the values, but also a feedback mechanism so that people running firms have a well-informed understanding of how those firms are actually interacting with end users in reality. And you'll also hear a little bit more from Helene shortly about how the consumer duty that we are intending to bring in may help sort of shape our expectations in this regard as well. So I'll wrap up there from the supervision perspective and hand over to James, who will describe the approach we're taking at the Authorisations Gateway.
Thank you, Paul. Thank you for inviting us today. It's great to be here and to see real people. So that's great. My name's James O'Connell. I'm a senior manager in Authorisations, and I'm responsible for the teams that manage our banking, insurance, payments, and e-money applications. And also, I'm responsible for the team that that is responsible for registration applications from crypto asset firms under the money laundering regulations. I thought I'd start with a bit of an update on where we are in Authorisations. So, first of all, over the last 2 years, we've seen a notable increase in applications from payments and e-money firms, most notably a 70% increase in applications from e-money firms. So it continues to be a sector that is attractive to new entrants, which is great for promoting competition and encouraging innovation. But we recognise that that increase in applications has also led to some delays, and it would be wrong of me to sit here and not acknowledge those delays at the gateway. We recognise the challenges that has created for firms, and we have taken and are taking steps to address that. So we have increased the headcount in my team by 60%, including recruiting an additional manager, and we're looking at other ways that we can streamline our assessment and process applications more quickly whilst maintaining the standards that we expect of firms. And we're also aiming to be more transparent with applicant firms too. So recently, for every firm that had applied before February, we made contact with those firms. We told them when they can expect to have a case officer allocated, and we gave some high-level feedback on areas where the applications could do with some more work. I think it's also worth pointing out some of the things that we've identified in our assessments of applications, which can either lead to delays or indeed us refusing the applications. So there's probably 3 key things I'll pull out. The first is too often we see firms that are not ready, willing or organised to comply with the standards under the system. We receive far too many applications that are missing key documents or essentially they're in draft form. And we encourage firms not to submit a draft application just to get in the queue. All that will do is it will lead to us rejecting the application and it slows down the process for those applications that are ready. Secondly, regardless of the size of the firm, again, too often we see the individuals at the firm, they don't have enough of an understanding of either their business model or how they need to and can comply with the regulations. And finally, firms often delay obtaining safeguarding accounts. We recognise that it is a difficult process and it takes some time, but we'd encourage firms to start that early on in the process rather than waiting later on. And all of these points have been considered in our approach to the 4 outcomes that Paul spoke about. So first of all, on customers' money safe, we've enhanced our assessment that we carry out of firms' financial sustainability. So we carry out a lot more analysis of their projections, and we'll challenge firms if we think those projections are unrealistic or unsustainable. Clearly, we'll continue our focus on safeguarding. That will likely extend to us carrying out interviews of those responsible for safeguarding so that we can ensure that they have the competence, the knowledge, the capability to perform that critical role. And Paul mentioned the importance of robust wind-down plans, so that will remain a focus for us at the Gateway too. It's really essential firms read our approach document that sets out the sorts of things that we expect to see in a wind-down plan. In terms of our second priority, financial system integrity is not compromised. Again, we'll continue to focus on how firms are identifying, monitoring and managing the risk of fraud and financial crime. And that will include us assessing the money laundering reporting officers that are being appointed by firms. And again, we're likely to interview those individuals to make sure they have the requisite knowledge. On the third priority, customers get the products and services they want. Firms should expect us to ask questions about their wider business and what role payments activity plays in that business. We conduct a holistic assessment of a firm's business model. We'll look at both the unregulated and the regulated products and services and how they interact and how the unregulated products may impact the regulated payments activity. So as an example, we're seeing more and more firms that are using payments firms as their on-off ramp to crypto, and vice versa. So firms should be prepared to talk about the risks of harm that those unregulated products pose to their regulated business and to their customers and to the wider market. And then we want to understand how the firms are mitigating those risks. And we're also increasing our focus on the treatment of customers with vulnerabilities. So our Financial Life survey identified that between March and October 2020, the number of adults with characteristics of vulnerability increased by 3.7 million to 27.7 million. And that is about 53% of all adults in the UK. So it's essential, therefore, that firms are able to identify and support their customers with characteristics of vulnerability. And then the final priority, the market's competitive and supports good consumer outcomes. So I've spoken a fair bit about what we expect of firms that are entering the market. Also, what we will be doing in the year ahead is focusing on what we can do to support firms and ensure they're best prepared when they start their journey in the payments industry. And so that'll include a review of all the materials we publish on our website. We'll be making changes to those. You can also expect to see us at more events like this. Nothing beats actually coming out and engaging with the industry. And it's been great to hear today a number of people stand up here and say that they want to engage with regulation and the regulators, and they want to hear from us. And having worked at the regulator for over almost 24 years, I can tell you it hasn't always been like that. And finally, we'll continue to work with our colleagues in Innovate so that we can look to further develop how we support innovation in the sector. Paul mentioned also the new rules around operational resilience. Those are set out in PS 21.3 and they come into force on the 31st of March this year. So we expect applicant firms to have reviewed those rules, to have identified their important business services, and to consider the impact tolerances they need to apply. And now I'm going to hand over to Helene, who's going to talk a bit about our policy work.
Hello. Good morning, everyone. Thank you, Paul. Thank you, James. It's nice to see that quite a few of you are still sitting here. Not everybody has deserted us. It's important to start, I think, with recognizing that payments is central to everyone's life. It's central to our private lives, of course, our jobs too, and yours, most likely. But it is also central to businesses, to the economy, etc. And I think we all have an important role to play in making that work well, in making payments work well for everyone. I think first half of last year, over 35 billion payments were made, and that continues to increase. From a fintech perspective, I think the last figures I read were that 17% of all UK fintechs are payments fintechs. That tells you a lot. That means that, payments is really important, is central, is innovative, and all of these things. So I work in policy alongside Authorisations Supervision, but also our colleagues in Innovate that James just mentioned. And our role really in policy is about thinking about rules, guidance, legislation, advising colleagues internally, but also people externally on these rules, on the interpretation of these rules, etc. But a big role for us is also about thinking how those rules, guidance, legislation may need to change, may need to adapt when we think about the changes in the payments landscape. And in reality, payments has gone through a lot of changes in the last 10 to 15 years and more. It is incredibly innovative. It remains incredibly innovative. But it also creates challenges for us as regulators, thinking about how does that regulatory landscape fit with the evolving market, and do we have a role to play in thinking about maybe considering changes to those rules, those guidance, and supporting Treasury when thinking about legislation. And a lot of our work has been with HM Treasury and other regulators in the UK to consider exactly that in the last in the last few years, really. Part of this has been under the umbrella of the Payments Landscape Review, but not solely. I think in reality, COVID has also very clearly had an important impact on the people's relations with payments, the way they pay, the fact that maybe there are more digital payments than they used to, etc., etc. But technology has also had a really important impact. Of course, technology has an impact on our own habits, right? We do more things. If there are things that are accessible from a technological perspective, maybe it also changes our habits and vice versa. And our role in policy really is to think about how fit, I suppose, are our regulations, our rules. I'll start with what is actually very close to my heart and is around innovation, is that fourth pillar that sits there around competition and innovation. I think maybe it's worth starting with our colleagues in Innovate. We've mentioned them before, but they play a central role in supporting new firms or existing firms in innovative types of business models through two main tools. One is the sandbox, and the other one is direct support for perhaps smaller firms who need some additional guidance around how, to navigate, I suppose, a little bit the regulatory landscape. If we think about payments, I think around 40% of all the firms that have gone through the sandbox have been in the retail banking and payments sector. It's really big. It's not a minimum number. Again, it highlights how important innovation is in payments and the central role that payments play when you think about innovation more broadly. In terms of direct support, I think 1 in 4 firms, more or less, were also in the area of retail banking and payments. So it's really important that work continues. Our colleagues are not here today, but obviously in policy and in the same way as authorization and supervision, we work closely with them in ensuring that support. And I think a lot of this, when we think about innovation and competition, a lot of this is around balance and reaching the appropriate balance. And it's really difficult to do in practice. What does that mean? It means how do we effectively support competition and innovation in the sector, whilst at the same time mitigating risks that we see. And of course, from our perspective, we will think about risk to consumers and protecting consumers, and risk to market integrity, in particular financial crimes, that's fraud, that's money laundering, etc. If we think about innovation, I'll pick probably two things. I know quite a bit has been discussed already earlier this morning, but one of which is certainly open banking and the future of open banking, and the other one is crypto. James touched on it, but I don't think we can talk about payments without talking about crypto nowadays, either because crypto is somewhat being used or thought of being used as a payments rail or as part of the kind of payment journey, or because many payment firms are also looking at crypto for other things, and perhaps expanding their business, or perhaps investing in crypto firms, etc., etc. You will, of course, no doubt be aware that HM Treasury consulted last year on crypto, and in particular stablecoins, and to be a little bit more precise, in proposing to extend the payments perimeter to bring in stablecoins used as payments. I'm sure, as you can guess, that has kept us busy quite a bit in the last year and a half, working closely with other regulators and HM Treasury, thinking about what that could actually mean in practice if HM Treasury confirms that this is their wish to extend the perimeter. When we think about this, of course, that's one part of the perimeter. It's stablecoins used as payments. Of course, we are also talking about central bank digital currency. And our fellow regulators at the Bank of England, together with HMT, are considering whether there is a place for a central bank digital currency in the UK. That will also have an important impact on the market and an important impact on possible future when we think about stablecoins in the UK. Again, it is something that we are working closely with the bank, HMT, and the PSR on. Open banking, I think we continue to see a lot of progress in open banking. There now are over 5 million customers. We are, of course, supervisors, regulators, all of this, of open banking firms, and of firms that are account providers that are required to provide access to these so-called third-party providers. We are very supportive of further growth in open banking, and I think it's twofold. One is around data sharing, and the other one is around payments, using open banking for payments, and as a mean perhaps to increase competition when we think about the broader payments ecosystem and the current dominance of card payments in the kind of digital payments methods, if you like. But we also cannot talk about open banking without thinking about the broader data sharing beyond payments data. And that would, of course, be open finance, and that likely somehow sits under smart data. And therefore, again, here, we are working closely with Treasury and BEIS in considering what that possibly means for the UK and what is the role of the regulator here. We published last year our policy statements on open finance, and our work will continue now that COVID is a little bit behind us, hopefully. And so it's very much our intention to focus quite a bit of our work in policy around open banking and open finance. I'm conscious of time, or the lack thereof. All I'm going to say is on all the other three, I think this is this bit about what I talked around mitigating risks. And we in policy, in the same way as supervision and authorization, have a key role to play in thinking about how do we ensure that consumers are safe and remain safe and evolve in an evolving landscape. Consumer duty is once. Keep your eyes peeled for an update. Late July is the official timeline around final rules. But I think that's really important for the payments industry. And centrally, really, this is about culture. This is about thinking of or ensuring that consumers' needs are met and that they are at the heart of everyone's business. Maybe if I can say to conclude, I think that, again, thinking about all of what we've spoken about, I think there is a lot more to come from the UK payments industry, and there is a lot of really exciting things to look forward to. And I do think that we cannot see long-term good innovation in the UK if we don't also spend time on thinking about how we mitigate risks and how we ensure that customers get what they need.
Thank you very much from the Dream Team.